In a world where every transaction is tracked, every click recorded, and every secret exposed, there still exists a place where silence is currency, where names vanish behind numbered accounts, where fortunes lie hidden, untouched, unseen, and protected by laws older than modern banking itself. That place is Switzerland. For more than a century, Swiss banks have built a reputation for absolute secrecy. But how did a tiny mountain nation become the global vault of the rich and powerful? And in an age of transparency and digital surveillance, can financial privacy still survive? This is the story of how Swiss banks built an empire of trust and how that trust came under fire. Long before Swiss watches or chocolate, there was discretion. In the 18th and 19th centuries, wealthy European families began moving their gold and savings across borders, not for higher returns, but for safety. War, revolution, and political upheaval ravaged Europe. Kingdoms collapsed, monarchs were exiled, and through it all, Switzerland, neutral, small, and fiercely independent, remained untouched. By the early 20th century, Swiss bankers had mastered one thing: privacy as a product. They realized that in a world of spies, kings, and chaos, the most valuable thing money could buy was anonymity. In 1934, the Swiss government passed a law that would change financial history, the Swiss banking law of secrecy. Under this law, disclosing a client's name without consent became a criminal offense punishable by prison. Not even foreign governments could compel a Swiss banker to reveal who owned what. It was the birth of modern banking secrecy and the beginning of Switzerland's transformation into the world's hidden safe. As wars tore Europe apart, Switzerland's neutrality became its greatest asset here. During World War II, both sides, the Allies and the Axis, funneled gold through Swiss accounts. For some, it was a lifeline, for others, a convenient hiding spot. After the war, as economies rebuilt, Switzerland emerged stronger than ever. Its banks were symbols of trust, discretion, and stability. Private banking in Geneva and Zurich became the gold standard. Names like UBS, Credit Suisse, and Julius Baer were whispered with reverence in elite circles. By the 1960s and 1970s, Swiss banks managed nearly half of the world's offshore wealth. Corporations used them to park profits, dictators used them to hide fortunes, and families used them to protect inheritance. It wasn't just money, it was identity protection. But beneath the elegant marble floors and polished vault doors, cracks were forming. In the 1980s, scandals began to pierce the veil of Swiss secrecy. Investigations revealed hidden Nazi gold, unclaimed Jewish assets, and accounts linked to dictators from Africa to Latin America. For the first time, the world began to question whether Swiss secrecy protected privacy or shielded corruption. Governments demanded transparency. The United States passed laws requiring disclosure of foreign assets. Global watchdogs began tracking tax havens and money laundering networks. Then came the 2008 financial crisis. As the world's economy collapsed, nations went hunting for lost tax revenue, and Switzerland was their first target. In 2009, the US Department of Justice charged UBS with helping Americans hide billions in undeclared accounts. UBS eventually paid a $780 million fine and handed over thousands of client names, an unthinkable act just years earlier. The message was clear: the age of absolute secrecy was over. As the world went online, money followed. Digital banking, instant transfers, and cryptocurrencies changed everything. Swiss banks, once the fortress of paper and gold, had to adapt or vanish. In 2014, Switzerland signed agreements with dozens of countries under the OECD's Common Reporting Standard, a global framework to share tax data automatically. It was a major shift. For the first time, Swiss banks began reporting foreign account information, but while many thought Swiss banking secrecy had died, it merely evolved. Rather than physical secrecy, Swiss institutions focused on legal and structural privacy, using complex trusts, offshore subsidiaries, and digital encryption to protect clients' identities within the bounds of international law. They didn't abandon secrecy, they reinvented it. Today, Switzerland's banking system manages over $2.5 trillion in offshore assets, more than any other nation on earth, but the battleground has shifted. Instead of vaults and ledgers, privacy now lives in algorithms, firewalls, and encrypted servers. Fintech firms in Zurich and Zug's Crypto Valley are pioneering digital banking solutions that offer both transparency and discretion, a paradox of the modern financial world. And while governments demand ever more data, millions of investors still flock to Swiss institutions for one reason: trust. Because in a time when personal data is sold, stolen, and exploited daily, trust has become the rarest currency of all. But this story isn't just about money, it's about morality. Where does privacy end and secrecy begin? For some, Swiss banking is a symbol of liberty, the right to protect one's wealth from political instability. For others, it's a symbol of inequality, a system that hides the crimes of the rich. The debate rages on, yet in the shadows of the Alps the old rules remain. Names are never spoken, questions rarely asked, and silence is still worth a fortune. Look closer and you'll see history repeating itself. Just as gold once crossed the Alps in secret convoys, today digital wealth flows through encrypted blockchain networks. Privacy coins, DeFi protocols, and offshore crypto exchanges are the new Swiss vaults. And just as the US once pressured Switzerland, now regulators chase crypto firms across borders. The names have changed, but the struggle between privacy and power remains timeless. Even the biggest players, from Binance to Tether, are accused of becoming the new havens for financial secrecy. In many ways, the crypto age didn't kill the Swiss ideal, it globalized it. So how do Swiss banks protect financial privacy today? Through three pillars: legal protection, centuries-old laws that still respect client confidentiality; technological innovation, encrypted data systems stronger than most national security networks; and reputation, the trust built over 200 years of neutrality and discretion. But the question remains, in a world of surveillance capitalism, will privacy itself become a crime? The Swiss model faces its greatest test yet, surviving in a transparent world without losing its soul. Maybe financial privacy was never just about hiding wealth. Maybe it was about protecting freedom, the freedom to choose what the world doesn't get to see. From gold bars to blockchain, the story of Swiss banking is not just a financial history. It's a mirror reflecting humanity's eternal need for control, secrecy, and trust. And perhaps when the final vault door closes, the most valuable thing left inside isn't money, it's silence.